Welcome back. Joining us on the show now is Colin Shah, is MD at Kama Jewellery. Colin, hi. Thank you so much for joining in. First of all, your sense on the prices itself, because they continue to be very volatile. Looks like gold is going to break $4,000 an ounce anytime from now. How would you look at the very high volatility in gold prices? And how are you reading all of those global reports, which still suggest that 4,500, 4,800, 5,000 by next year end is a possibility?
Thanks, Manisha. So gold has been volatile, will continue to be volatile. This global uncertainty that we've been seeing continues over the last, 3 quarters now since Liberation Day, as Trump calls it. So I guess we are not seeing any pause, I would say, in tariffs, in the Russia-Ukraine war, in what's happening in Israel. So with everything being the way it is, gold is the safest haven and looks like it's on its way to $5,000 for sure. Maybe it's in the next 12 months, 15 months, but it's on this northwards journey. So that does make trade extremely volatile. Retail in India has become challenging, especially in terms of volume. Volumes we saw were significantly down Diwali time, though retailers made it up on the value side, but the consumer is holding back on the number of grams they're wanting to buy. At the same time, we are obviously seeing a large part of everyone's portfolio moving into ETFs, digital gold. So gold continues to be, in a strong place.
Colin, how are you looking at the kind of import data that we have seen for the month of September and now October as well? As compared to last year, same month, we've seen imports kind of really jump up, whether it has been about gold or silver clearly continues to be a very, very strong contender there.
See, over here, I guess there will be monthly anomalies. So, that continues to happen, where we see one weak month and one strong month. But overall, if you look at the year, I think the entire financial year, we'll probably be seeing tonnages more or less where it was last year, but a greater chunk going into investment. So jewelry as volumes is coming down 10-15%. The value, because it went up 35-40%. So everyone's making up, their value turnovers, whatever they were doing. But there is a greater chunk now going into bars, coins, bullion, directly into savings.
It is. Colin, how are you also looking at the studding part of it? I mean, as you said, jewelry in numbers, in sense of value, perhaps would be the same volume, as you said, 10-15% of a decline there. But within this as well, is it going to be about budgeted? Is it about light? Do you see bridal numbers continue to be as strong?
Bridal will be strong because now in the next 6 months, obviously, is the wedding season. So, every year we do see December to March being quite a spike. The consumer was expecting, I think, some amount of correction post Diwali, which did not happen. So there was some kind of, holding on to their purchases, hoping that the pricing would correct and they'll get a deal closer to the wedding. But that's really not happening. So I guess we'll see a spike in sales from December to March period going into season. But having said that, volumes are subdued, values will be made up.
How are you also looking at the exports number? Because that also continues to do well with the kind of other markets opening up and the rerouting that we've seen happening for US as well. What really seems to be doing well within that segment?
US continues to be strong. The consumer, in spite of inflation and everything that we're seeing, I guess the sales at the retail counter, even as of last weekend, haven't been very weak. Let's put it that way. The industry was expecting a little softer Christmas, but in the run up to Christmas, it seems like numbers will be more or less what they were last year. So it seems that tariffs have had its effect on supply chain and how the jewelry gets to the US and the counter, and everyone's had to jump through hoops, just to make, I guess, this whole thing happen. But at the end of it, consumption still is strong. Lab grown is in a good place. Natural also, after, I guess, the volume drop that we've seen over the last 2-3 years, seems to be steady this year. And actually, in the larger stones, especially 2 to 5 carats, there's also been a little, upside on the pricing. And even in the very small goods, we are seeing strengthening or a little, going up, especially after Diwali, as manufacturing in Surat is down. So natural also seems to be in a good place. Lab grown is okay, and the jewelry business overall, especially on the US side, is quite strong. Coming to the brands, interestingly, they've had a very strong last quarter. The Richmond Group, LVMH, all the larger companies. So it seems like the luxury space and the rich are getting richer, like and there's no, I guess, dearth of money at that very, very top end of the market. So if you see large stones, large emeralds, large rubies, all kinds of luxury, whether it's, I would say, any country in the world, that continues to be extremely strong, actually.
Wow. Okay.
Okay, all right. The rich seem to be getting richer. Thanks very much, Colin, for taking us through that conversation, and Manisha as well. Well, the other example of the rich getting richer definitely is in the stock, in the Physics Wala listing today. So 38% increase is what we've seen in terms of the price post-listing. So Physics Wala, as you can see, has just zoomed ahead in today's trading session, and taking it with it is Grow, which is up around 8.5% at the high point of today, already picked up around 27% this week. We'll do one thing. In fact, we'll stick with this story. We'll take a break, but on the other side, we'll focus on these recent listings, Physics Wala and WeWork. More details on both of these coming up.